Hello guys, today we are learning the concept of trading using engulfing bars. What do I mean by engulfing bars? I'm just saying uh you'll be focusing on the candles. For instance, this is a green candle, as you can see, then we have a red candle. So when the next candle covers the previous candle like this, we say the candle has been engulfed. Okay, so if you use engulfing bars, you're most likely to enjoy the next full candle. For instance, let's say you can see that here, this candle was engulfed. So how do you trade after that? You just trade the next candle, then you hold your trade. But make sure that when you enter your trade on a bigger time frame, you should look for your take profit on a smaller time frame, because usually the bigger time frame can give you a stop loss that will be very far, but you should analyze on a bigger time frame. Then you move to a smaller time frame to look for your stop loss and take profit. So let's start. For instance, you can see that right now, boom 300 is producing a bearish candle. Always trade according to the trend, guys. Don't be the type of a person that will try to buy when the market is like this. Then you should also know the meaning of these candles. The meaning of this candle. For instance, here, this candle is wicks on both ends, at the top and at the bottom. So this is a sign that the market is still undecided. It does not know whether it's going to buy more or it's going to sell more. So usually, don't be the type of a guy that will enter trades anytime just because you want money. You lose more money. Just look for one trade. One trade can give you good money, you know that. So as for me, I usually prefer trading using H4, H1, M30, M5, and M1. So we're going to start our analysis on H4. So now shifting to 4-hour time frame. This is our 4-hour time frame. If you check clearly, we have a very nice engulfing bar on H4, which simply shows us that the market has been moving up for a while. Then, if you check clearly around this area, you can see that the market engulfed this candlestick. It closed this candlestick. So what you can do again is you can wait for it to close this candlestick around this point. Let me put a horizontal line so that you can see what I'm trying to elaborate here. If you check clearly, you can see that this candlestick closed around this area. Can you see that? Then there was a engulfing bar that went upwards. So these candlesticks managed to close this week again and closed above this week. So what you do is, if you are late, let's say you just open your MT5, then discover that the market is already gone up. Another thing you can do is you wait for it to retrace back to that closing area. This was the closing area, and as you can see, it just touched at that point, then went upwards. So this is how the market moves. If you want to make more money on tariff, make sure that you analyze on a bigger time frame, which is H4. Then you move to H1, because usually if you get your signal on H4, you're most likely to enjoy more pips. Those who analyze on M1, they usually get trades that is uh more noise. For example, you can see a momentum to buy, but it might end up selling. So always use H4. H4 is better for analysis. As you can see, for instance, if you had entered around this point when it engulfed this candlestick on H4, you would have enjoyed all these pips. Just imagine from here, and it closed this zone. So since it closed this week, it's a sign that the market is still going up. Okay, the market can still go up, but what we are sure of is it's if it pulls back to this zone, to this closing area of this candlestick, it's gonna start to buy again. So always trade according to H4. You can just trade one H4 candle per day. I think that's enough for the day. Don't over trade, guys. Wait for good setups. So this is a pretty good setup for Boom 300. I think I've shown you how you should analyze. We use engulfing bars, for instance, this one. Then you need to know the scenario to use these engulfing bars. If it's you're looking for selling opportunities, make sure that you find that engulfing bar at the top. For instance, we have this one. Can you see that we have this green candle, which is a bullish candle? Okay, so the market did, uh, got both wicks at, at the top and at the bottom. So if you check, you can see that it broke this area. This is the zone that I was talking about. This is our point of interest, the point that we'll be mostly interested in. If you check clearly, it moved like this, then pulled back and reached that area again. What happened next? It started to sell hard. Check the movement. So you should try this strategy, guys. It's one of the best. You should try it. So now I'm now shifting it to another thing. Then I'll show you this system. Okay, so we have this system. This system just analyzes the market same as the way we were doing. But the thing is, it's now easier to use because now it just gives you entries only. So here we have certain things that we look at. Right now, we can see that we have this chart. This chart is there to show us how the market is moving. If you check on M1, it's saying sideways, M5 sideways. Technically, when it's looking like that, there will be no 100% entry. Okay, 100% entry. So what we are trying to say is the signals right now might not be that effective. As you can see right now, it just projected this arrow. This arrow is the signal that we usually follow. So if it crash, make sure that you follow these signals when this line is red. If this line is red, then you follow those signals. So this is the EMA 200. So you should make sure that this line is red. When this line is red, then mostly when it gives you a signal, it will spike. Then we also have these lines, these red lines. I think you have seen it now. These red lines are there to show you that there's a resistance around that area. You see, it gave us that signal. I think you saw it. It gave us that signal and it just spiked. But for you to hold this kind of a trade is now hard. Why do I say so? Always make sure that the spike should cross the previous spike. So since the spike did not manage to cross the previous spike, then the chances for you to hold that trade are very low. So don't be that type of a person that you uh make profit, then you decide to hold. If you hold, you might end up getting depressed. So what am I saying? I'm saying let's go back to H1. We want to repeat our same concept, the concept that we used. This is H1. As you can see, can you see that there was an engulfing bar? Here there was a bearish candlestick, right? Then it moved. It crossed the closing area of the candlestick around this area, then pulled back like this, then touched this horizontal line and started to sell. So in a nutshell, we're saying I think there's a selling momentum on crash 500. And as you can see, we've been given a signal, which is saying a sell entry on a bigger time frame. So the market is most likely to move a bit going downward. So you should respect certain areas. So in a nutshell, crash 500 can sell to, this should be your TP1. This should be your TP1. The next TP, the closing, another closing area of the next candlestick that is visible. Then you have your TP3, which is this one. If you are doubting about the TPs, guys, just take whatever profit you have made. Then we have these nodes. I think you can see them clearly. These are the nodes that I'm talking about. So whenever it reaches this node, usually it will start to pull back. For instance, here it hasn't reached that node, but chances for it to pull back are high because if you check clearly, you can see that it is in the same zone. So it means the resistance around that area is high. So don't hold for too long. When you trade using engulfing bars, make sure that you keep on checking your H1 candles. That is how you trade using this strategy. So I'm now going back to smaller time frame. This is a smaller time frame, H1. So as you can see, what I was saying is this thing will give you entries as you be moving. So here we have this this uh this node. So in a nutshell, it is supposed to pull back to that node, then spike. Okay. So the reason why I don't enter, I'm not gonna enter this trade is because this spike did not manage to cross this spike. Okay. So there are chances that this signal might not work. So always trade when the spike is crossed the previous, when the spike is crossed the previous spike. For instance, here, you can see that the spike crossed this spike. So when it gave us this entry, we did not hesitate to enter it. That's why it gave us a very good spike. So I'm now going to other pairs. Then we have an important feature about this again. If you can check clearly, you can see that there are notifications that are sent by the system. It will be telling you what to do. So as you can see, Boom 1000 is telling you to sell. Let's check Boom 1000 together and see what I'm trying to elaborate here. This is Boom 1000, but the chances for you to sell around this area, I think it's low. Because I usually prefer to sell when there are no spikes at all, especially Boom 1000. Well, Boom 1000, you should only sell it when it has a setup like this, whereby it will be giving small spikes. If you enter Boom 1000 like this and try to sell, you're most likely to make loss. So how do you trade such a scenario? You first go to H4. Can you see what has happened now? There was this candlestick and it was engulfed by this one. So we should wait for it to pull back. It will pull back to this zone. So it should pull back to this zone again. Then spike harder. Then it will start to sell. If we go to H1, there was engulfing. Okay, let's use engulfing candlesticks on H1. But if you see it on H4, that is a bigger confirmation. As you can see right now, here it should spike until it reaches this zone. So this should be your TP, as you can see right now. That's why it's still spiking. As you can see, it said buy boom 1000 and this that number. I think you have seen the price. Then we also got another signal on boom 300. So you see, it will be sending signals. What your job is to just check when it has sent the signal. So here we have received a signal. And as you can see, we have small candlesticks. So the confirmation is a bit low for you to know that you should buy. Okay, so we check on H4 first. So on H4, you can see what has happened. This candlestick was engulfed by this one. So in a nutshell, we are saying the market is still going up. And as you can see, it left a very long wick here and it's now producing another wick. So in a nutshell, our market is now undecided. So we can check on H1. On H1, it engulfed this candlestick around this area. So if you are to enter, if you want to enter this kind of a trade, just know that you are late. You are late. So for you to enter this and you start to buy now, you might end up getting loss. So always try to monitor your trade so that whenever it engulfs the candlestick, you enter as soon as it engulfs that candlestick. So try by all means to have 2 or 3 confirmations before you enter a trade. That is the only technique you can use if you want to trade using the strategy and using the technical analysis. So thank you. Don't forget to subscribe to our channel. If you have any questions, you can just ask me and I'll answer it directly to you. Thank you.